Welcome to episode 4 of the Tempo Living podcast, Tempo Talks, where we talk about home building, business, and everything in between. In today's episode, we'll dive deeper into finance and accounting. We're joined by Wayne Gatt, partner at consulting firm KPMG. Wayne has worked in the financial services industry for over 22 years and advises everyone from sole traders to high net worth family groups. Wayne, welcome to Tempo Talks.
Thank you, Jeremy, for having me.
To kick things off, give our viewers and listeners a bit of an introduction as to what you do at KPMG and where did it all start for you?
So, Jeremy, I started with KPMG, as you mentioned earlier, 22 years ago as an undergrad in our city office, primarily focused on private clients, high net worth individuals and family groups. My specialty is tax and accounting. So our bread and butter of providing advice on tax returns and financial statements. And that extends out to estate planning, succession planning, business structuring, international advice, or anything that our clients need locally to support them with their businesses and their plans. Starting off in the Sydney office was very different many years ago, but more recently moved across to our Parramatta office, having been there for the last decade and leading that business in our private client market.
Fantastic. And before we dive deep into the finance and accounting matters of our industry, what was it like as an undergrad and intern at KPMG starting out? Have you got any war stories for us from a baptism of fire perspective?
Yeah, look, Jeremy, it was really different. We think back 22 years ago, we had desktop computers, laptops weren't around. We had paper files. We sat in our own sort of cubicle with landlines. Now, fast forward 22 years, technology's had a huge impact on the way we operate and work. Obviously, electronic files, DocuSign, less, no paper, so paperless environment. And our agile working approach. It's obviously just changed that we're able to work from different locations, plug in and connect straight away, rather than having a dedicated desk and seat in one location. It's just shown how agile we can be working from different locations rather than just one.
What was your first role at KPMG?
So my first role was, I was titled an undergraduate. I think my first assignment or engagement back then was on an audit job. We had to go out to our clients to actually tick off invoices and actually check the testing of those invoices to the accounts, like literally walking through paper files. And it was very different, lugging out a little suitcase out there with our hard copy files all throughout Sydney.
Speaking about your client base, you mentioned it varies considerably from large-scale operations, family trusts, or family offices, I should say, even to small to medium size. How does that play into your world around managing different expectation levels and then also different personalities?
Yeah, good question there. I think one key theme there is that they're all private clients. So no matter the size of the client or the wealth of the client, the core is trying to service a private client who is either working in partnership with a friend or a family member, or it's a family business together. So you're working directly with the owners and the people that are the key decision makers. So across that base, whilst the client group might be different or the industry and sector might be different, the type of client is really the same. They're a private client. They are looking to grow their wealth. They are looking to run. They're running their own business. They're looking to expand or make differences, and you're working with the owners. So it is quite similar, despite the different scale and size.
Speaking of scale, what advice, now getting into the home building world, would you have for the sole trader, carpenter, who's a subcontractor and wants to pivot to becoming a builder and then scaling up to 40 or 50 turnkey homes a year? That's a significant change. But then compounding that to becoming a volume home builder, talk us through what that journey might look like from a finance and accounting perspective.
Yeah, I think the first bit of advice I'd give to them is actually to make sure you get advice. They're often your sole trader or your contractor is really good at what they do. They know how to build, they know how to construct. They're really good at their core, but they need to ensure that the structure of what they're setting up is right. Should they be in a trust? Should they be in a company? Should they be in a partnership setup? And also just getting that advice around accounting and record keeping and making sure that they've got good visibility of how they're accounting for their construction jobs. Obviously, in the construction space, majority of builders will work with progress claims, and obviously the expenses come out at different periods. So the timing and recognition of your account, your income and expenses could vary, and therefore getting the right advice around that to ensure that you've got good visibility of your financial records is important.
And I think, talking about that financial visibility, how important is it to have monthly reviews on account keeping, bookkeeping, your P&Ls, your balance sheet, keeping them up to date for one, growth, but two, seeing what's coming up, whether it's good, bad, or indifferent for that coming financial year.
Yeah, look, I think it's really important. Obviously, it's a critical component to success. Why reviewing your monthly accounts, being your profit and loss, your balance sheet, and your cash flow statement are important is really just to understand your performance for that month, so that you know what's come in, what's come out, what is your profitability, what's your margins, where is your potential leakage in that point in time, and also just to remember that if you've got your accounting done right, then you can ensure that any upcoming invoices or any income that you should have received is accounted for correctly. Obviously, timing can vary. You might do work in a particular month and get invoiced in 3 months' time. However, you should bring that to account at the right time and accrue it to ensure you've got good visibility of your P&L and your records.
When we talk about that visibility, we spoke about a sole trader starting off, it's just basically working out of his ute, and then scaling through to be a subcontractor with a team, and then potentially just branching out as a home builder. At what point would you pull the trigger to employ someone directly to help you with your bookkeeping, or are there options for people to consider externally?
I think there are obviously multiple options. I think in the initial stages, having an external bookkeeper and a consultant that might be looking after your records once a fortnight or once a week, depending on the scale and nature of the operations at that time. And then as you continue to grow, scaling that up, and you'll get to that point where you've got a team of people, you've got a payroll that you need to run, that you'll start to look at the needs of a bookkeeper or an internal accountant, maybe coming in 2-3 days a week basis. I'd always recommend to people, transition into it. Obviously, you're trying to manage costs in those early days, so getting someone full-time and on the books might be difficult. Therefore, using an external bookkeeper or agency to start with, and then as the needs grow, looking at that role and how it may transition. And it might at the start be partly bookkeeping, partly administration, and then turns into an accountant role over a period of time.
And what advice would you have for these small business owners, in our industry? Again, swinging a hammer or building homes. They're not necessarily so attuned with financial and accounting. What could they be doing to upskill and get their financial fitness where it should be?
I think the first point there is ensuring that they've got an accountant or a tax agent that understands construction. There are some nuances around the treatment of long-term construction contracts and the way that accounting income is recognised and is taxed in this sector. I think some of the war stories I've seen around it are, sole traders, small businesses coming to us where they haven't had someone with the right experience that can actually account for their records that may lead them to incorrect business and decision making. So I think first point is making sure you've got someone there that understands the industry and understands the accounting for the industry, and then together with them, asking those questions. Why does my P&L look like this? Why have we accrued this income? Why am I getting taxed at this point in time? Why is my balance sheet represent this where I think it should look like this? I think you just got to show that interest, and if you've got someone that you're working with on the other side that is willing to teach you and upskill you along the way, I think together using that experience will take you to where you need to be.
You mentioned partnering with an accountant who has a good understanding of the home building industry. Why is ANTA such an important aspect, and what is it?
Yeah, so ANTA forms part of a builder's home warranty assessment to be able to get the homeowner's warranty insurance to allow them to issue the certificates to build homes. In real simple terms, ANTA is a calculation of assets less liabilities using certain percentages as set out by iCare to get to what we call an adjusted net tangible assets number. The ANTA value is almost like a minimum equity that is set in the guidelines that a builder should have available to them at any point in time if they needed to have had a shock event or an event that they need to liquidate that would allow them to, at a minimum, continue the business. So it's just a calculation and a formula that is set in the guidelines. But if you don't understand how it is calculated or what it means for the assets that you've got on the balance sheet or how to treat assets and liabilities that you have on the balance sheet, we've seen huge differences in the calculation of it that could sometimes be at detriment to the builder's assessment. We've seen on many occasions that through making some small above board changes, we're able to improve the ANTA position of the business just because there's been a misunderstanding or inaccurate accounting that hasn't been calculated correctly to give the builder's true position.
For a home builder, when is ANTA calculated?
Well, it depends on the assessment cycle that the builder has, but generally if they're on a 12-month cycle, ANTA is assessed at 30 June, so end of financial year. But it is important to take into account that the ANTA calculation is looked at as an average of the last 2 years, and there is a bit more detail that goes beyond that. So it's not just focusing on the current year, but knowing what the prior year is, and also realizing that the ANTA for this year will have an effect and impact on the ANTA for next year. So you do need to be looking at the business, not just at that point in time, but at least over a 2-year period.
And for businesses that are looking to scale, how can you lift ANTA to get the business to the next level, to increase your home warranty insurance coverage, the number of jobs that you can build at any one time? What are some tips for home builders?
It's a good one. Make more money. So I think, obviously increasing your profits and retaining the profits within the business is one of the ways of improving ANTA within the balance sheet. If there is an equity injection or capital injected by the shareholders, that is another way to improve the ANTA. If you've got assets on the balance sheet and subject to the accounting standards that are applicable are able to be revalued, you might consider revaluing the assets on the balance sheet. That can also lead to an improvement in your ANTA. So as you're getting closer to 30 June, it's ensuring that you've got as much cash as you can within the balance sheet, looking at older debtors that might contribute at a 0% to ANTA and getting them brought in. If you've advanced funds to related parties, well, they should be brought back into the business and retained in the company. So there are a few of those items there that can be looked at that can significantly change the ANTA position.
We all love making more money. When we're looking at a P&L and your expenses, what should we be focused on from a business perspective to make sure that our costs are maintained or even getting a few savings along the way?
Yeah, I think looking at your margins at first. So as a builder, looking at your gross profit margin, I mean, that's a number that you guys, whether you're an accountant or not, that is a number that's in the DNA of a builder on what they actually need to achieve. So understanding where the margin is at and what costs are going into that margin, and making sure that there's been no leakage on a job or any items that may need to have been closed out that might have been provisioned for that are no longer there. So I think that's looking at your top line number. And then when you're looking at your overheads, one of the key things everyone should always do is that is do your analysis of your costs this year over last year and have a look at what's moved, why are things trending in a particular way, and then looking at things that stand out within that P&L that may be incorrect or may need to be looked at to ensure that you're getting to the correct profit number at the end.
So what, in your experience, how have you seen businesses grow, tying into that overheads expenses?
Yeah.
But then when you're growing, how have you seen businesses expand and grow, but also keeping, making the right calls early for resourcing, staffing, etc.?
Yeah, so seeing how businesses have grown, one of the key things is having a good dividend policy. And what I mean by that is ensuring you've got a good balance of retaining profits within the business for growth and for expansion. So you've got that capital to be able to reinvest. rather than taking that out on year. So I think that's one area. Two is having good people around you. So it's ensuring that you've got good people. So ensuring you've got good people in your management team, in your finance team, in your consultants that support and advise you, to ensure that they're giving you the right advice and you have got that ability to challenge that advice, to think about what's next and next level. I think the other area that I've seen builders do really well is having a good network outside of their environment as well, to keep ahead of what the trends are. So what are the trends in design? What are the trends in construction? What are the trends in land size and lot sizes and developments? And also keeping ahead of what do people want? So particularly in the building space, we've seen homes change. Even I've seen homes change in terms of size and what they've got in them, and the bathrooms, living rooms, guest bedrooms, non-guest bedrooms, a range of different styles that are meeting the changing demands of our environment and of people. So I think ensuring you've got that knowledge outside is another area that I've seen the building business grow.
So keeping ahead of the curve.
Yep.
But also making sure that you're talking about the success and growth, but if there's a downturn, having those cash reserves when times do get tough.
Correct. I think you need to look at the balance sheet and the equity position and just thinking it's not just made profit today, take it out today. You've made profit today because you want to keep that profit for growth and for reinvestment. But you also need to have some buffer within there to get through the hard times. I mean, we've had a few challenging years within the last decade. And I think I've seen a lot of the builders that have been successful through that period are because they've made good decisions around managing costs, managing their margins, but also ensuring that they've got the right cash reserves or diversity in their income streams to be able to support themselves through the highs and the lows.
And I think that's really critical, medium to large scale businesses, but also your sole trader or your PTY Limited business, where they might be mum and dad working and they see things where it's been a good year, let's go and spend the money. I think that's incredibly important for so many small businesses to consider.
Yeah, and I think there's a good balance between it, right? There's, working really hard in the year and taking the fruits of what you've earned and enjoying and spending it. And everyone at a private business level, it's their choice on whether they want to do that or not. But it's finding that balance, I think, between what could we retain, what could we be doing in the next 12 months, 18 months, 5 years, and also having that strategy around where do we want to go? How do we want to grow this business? Do we not want to grow the business? It might not be for everyone, but I think, again, I don't hesitate. People should take some money out and enjoy themselves and celebrate the successes that they've earned. But at the same time, it's finding the balance to their strategy and where do they want to go and what could be ahead of them.
So maybe opt for the Quintrex fishing boat instead of the Malibu ski boat when things are going really well.
Well, that's right. Again, back to my word is find the right balance, right? I think it's important for people to be able to enjoy what they've got and what they've earned and worked for. But it's also then looking at how, what's the legacy that they want to leave behind with this business? Where does it go for them? With some of our private clients, it's about leaving it for the next generation and continuing that legacy and leaving a brand and leaving something that future generations can take on. And I think that's one of the key things we see in the family business world.
Speaking of family business and small operators, what are the 3 reports as a minimum that they should be running their eye over every month?
At a minimum, it's easy. It's looking at your balance sheet at the close of the month. It's your profit and loss, so you can look at your profitability, and ideally having a cash flow statement that shows where your cash ins and your cash outs are for the month. They're the 3 reports that are really looking at historical, but the next key thing to look at there forward from a financial perspective is what is your actual cash flow forecast? You might have had a really good month where you had heaps of cash come in because your clients are paid and your customers are paid, but you might not have paid all your expenses out. You might have future CapEx in the next few months that you need to spend. So having that forecast on where the cash needs to go is important to get that right balance of what's in that you can use and what do you need to put in your reserves for future expenses and spending.
So we've just passed the last financial year. We're into a new one. Any idea or tips that should be focused on from an ATO's perspective for small business owners and home builders specifically?
Look, always, as I say, ensure that your ATO debts and liabilities and lodgements are on time, and your payments to the ATO are on time. From 1 July, that's just passed, interest on ATO debts is no longer deductible. So that will obviously add an additional cost to sole traders and to all businesses that have ATO liabilities. So I think ensuring that your ATO compliance is correct is the key thing. So ensuring your lodgements are correct, they're on time, your payments are done on time. That'll keep you in the safe zone, and having a reliable tax agent and accountant that can support you in that process is critical also.
Entering the new financial year and looking back on the last, where are some small businesses going wrong, or where could they be going wrong when it comes to their tax returns?
Some of the examples of where things could go wrong is where they're not recognising their income and expenses in the right period. So that could result in an overpayment or an undertax in one financial year over another. It might be that they're lending money out to themselves and not complying with the rules around loans from companies to individuals. That could result in additional tax payable to them. It might also be that they're not using the correct depreciation rates on the assets that they have. It could also be not using the right income tax rate that might be applicable to the entity, their size, and the type of business that they're actually engaged and working in. The other area is looking at ensuring that entertainment expenses, if the business is engaging in entertainment and providing that benefit to employees or clients, is treated correctly. Also, the use of motor vehicles in and out of businesses, how does that impact fringe benefits tax and deductibility of the costs associated with vehicles? The other area to keep focus on is whether you're paying your staff the right wages under the employment laws and are compliant with superannuation legislation, payment on time of super amounts to the relevant funds. So they're all sort of different and varied areas that we do see some of the smaller businesses having some challenges with. And that goes to the point earlier around ensuring you've got a good accountant and tax agent that can guide you through that and give you the right advice so that you're continually making the right decisions.
For small to medium-sized builders or businesses as a whole, what would your go-to move be if the accounts showed a pretty nice profit from last year? What would be your first move moving into the next financial year?
Yeah, so my first go-to move as a typical accountant there would be looking to make sure that the numbers are right. Before we start looking forward and getting too excited, is my profitability in the current year from a work in progress, income in advance, accrual of expenses that relate to that period, is my profitability right? If it is, and we're all good with that point, we'd be looking then at what are our forecasts in the future. We want to make sure that we're not making quick decisions because our profitability was good in one year and expecting it to be the same in the next year, unless we're sure about our pipeline and we've factored in any one-off items that may impact profitability in a particular period. When you've got all that set and you know that your numbers are right and going forward, it's then looking at maybe, is this a time that we need to invest into some CapEx? Is this a time that we need to invest into new markets? Is this a time maybe where the shareholders or the private client investors there could take out some money for personal use? So it's trying to then branch out and looking at where, again, back to where is the strategy of the business? What are they looking to achieve? And where should we place that money in future periods? So Jeremy, with that said, what would your go-to move be?
Ooh, throwing a question back onto me now, but it all depends, right? Where you are in your business journey. So Tempo Living, we have had some good success in the southwest and northwest of Sydney. I think natural progression around geographic spread would be a consideration. Ensuring you've got a good trade base, whether it's materials, labour, manufacturing, and seeing if the guys that you're working with in Sydney can scale with you and move into the regions. Finding that good site supervisor in that particular region, making sure that your business operation in Sydney, for example, is the same model as what it would be in the Central Coast and Hunter. I think there's a huge opportunity from a home building perspective around, we're in a housing crisis. People are moving out of Sydney because it's not affordable anymore. So my next move would be look to the Hunter, look to the Central Coast. We're already operating there. We're looking even further now into the regions where there's opportunity on the South Coast, the Illawarra. People have got to live in houses. This is a wonderful, wonderful industry to be in. And I think, though, you talk about your next move. What I would think too is making sure that you're scaling it at a good pace We've seen rapid growth of businesses before, and like you said, you want to make sure that your pipeline's there and supported. So then when you do make that move, going into a region, you're going to be putting more people on. You want to make sure that you can maintain that work, because you don't want to be giving them a tap on the shoulder in 12 months' time saying, look, it's dried up. Thanks very much. We had a crack. So it's got to be considered. But my next move definitely would be how to scale up.
Yeah, I think, as you said, their pace is really important, right? Making sure you get the right pace. You understand the geography and the landscape of where you're moving into. You've done your risk assessment on that region or that location, and the need for housing and homes in that space to be able to invest in. And that goes back to having the ability to invest, is looking at the capital that you might have preserved within the business and the equity that you've retained within the business and cash reserves that allow you to make that next move. I think what I'd be really interested to know is we talk about financial literacy essentially of builders, and us as accountants trying to help and guide clients, and recommending here that builders get the right accountant that can support them to understand ANTA. I guess over the last 5 years, how's your financial literacy of ANTA evolved or changed?
Another good question. Being a carpenter, coming off the tools, taking time to learn the trade, and then going into the office as an estimator, procurement manager, operations manager, I didn't really have much of an understanding for the best part of a decade in my experience, being exposed to the finance side. Yes, as a subcontractor and apprentice, you start to learn, I mentioned on a previous podcast, putting in a timesheet, making sure that when you get your pay slip, it all matches up. Estimating starts to give you an introduction to finance from a cost perspective for home building. Procurement, again, that's a step up, but you're not seeing what a balance sheet looks like or a P&L, but you are managing costs to an extent. So that was a really good pathway for me to start understanding what business operations look like from a finance perspective. In terms of then literacy and accuracy around P&Ls, it's been over the last 5 years working with Tempo Living that I've been exposed to understanding that. We have an in-house accountant. We've got 2 external accountants, and working in with them, getting an understanding of how that looks from a business perspective is so crucial, and just understanding, what's in the balance sheet. Again, your P&Ls. I feel like our business is very robust in terms of our reporting capabilities. Mid-month of the next month, I've got reports for the previous month. So we really know where every job is sitting from a margin perspective. If there's been any cost blowouts, what do we need to do to rectify that? But also looking at your cash flow, your aged debtors report. Also your creditors too. Again, money in, money out. It's very important to be across that. From an ANTA perspective, understanding that is very crucial around home warranty insurance, eligibility. As a home builder, especially in the market over the last 5 years, COVID, post-COVID, we've seen a lot of builders go broke, which is devastating for the industry, bad for reputation as well. But looking at how that works, home warranty insurance is so important. 1, for a customer. 2, for your business. There's an open limit in terms of total cost for construction, and there's also a number of homes limit that you can build at any one time, or have a policy at any one time. That all ties in significantly with that eligibility. Having a good business that is profitable and having really good visibility around what it looks like month on month is setting you up for success when you do put your lodgement in for home warranty every year.
Yeah, and I think, as we mentioned, like the homeowner's warranty lodgement is a key piece too, but then also the credibility of the business there too. If you've got the right, balance sheet, cash, and financial metrics within the business, then you're able to pay your suppliers on time. You're able to ensure that you're within the right payment terms for all of your obligations, not just suppliers, but if you've got debt, bank debt, ATO liabilities, as we mentioned before, superannuation liabilities, and having that ability to keep things done right. Your creditors and all of your other stakeholders will look at you as being a credible business that they're willing to do business with. And then that has flow-on implications to their business and the people that they do work for. So I think it's, as we said, it's really important for homeowners warranty and for lodgement for a builder. But then it's that broader credibility that they have in the market that allows them to attract the right customers and the right suppliers.
And we really pride ourselves on partnerships. You talk about your creditors, where we're working with the supply chain. The guys on the ground, they do work for us from a subcontractor perspective, but we always see it as a partnership, and that's making sure that they are paid on time, every time. Again, the climate over the last couple of years has been significantly different to pre-COVID, and making sure that people are getting paid is so crucial for a small business, a medium-sized business, any business at all, really. And look, coming back to what your next step would be and having that visibility, marketing is a big piece of any business that's looking to scale, getting your brand out there, but that obviously costs money. So for us too, we've made sure we look at the profitability of the business, all the expenses and overheads. So for the next financial year, you can plan and you can budget. And what we're doing is exactly that. Speaking of budgets, talk to me a bit about how important that is for year-on-year growth, and how important is it to tie that into, let's say, a 5-year business plan?
Yeah, well, I think a budget is setting essentially setting your financial goals for that next period or the next 5-year period, and it's establishing a baseline of what you think you're going to be able to achieve based on all of the knowledge that you have. In the building space or in the building industry, we'll say, well, you're relying on new contracts and new customers. So sometimes, the revenue side may be unknown, but you should have good visibility of your costs that would be expected to come over that 5-year period based on where the revenue comes in. So I think having a good baseline budget is setting some good direction and a framework of what you can assess your performance against. I think though with budgets, it's ensuring that you're agile with them as well and able to adapt or change them as they need to be. There will be shocks. There'll be one-off expenses that come in. There may be one-off projects that lead to additional income during a particular period. You may had to make some calls on particular projects or some costs that have blown out that you didn't expect. So I think it's having that agility around it and being able to flex with the budget. But I think in having that important baseline and a target to work towards is important. Also, it's there for the shareholders and the stakeholders and management to actually know where the business is going. You don't want to work for another 12 months or for another 2 years and realize that there is no profit on the bottom line, or you've gone into the red and made a loss. So you do need to target something and have some controls around it.
I think too, budgeting is so important for any business, and actually setting aside the time to do it. Whether that's using services like yourself at KPMG or your external accountant who do your tax return, or an internal bookkeeper. I think that's crucially important.
Yeah, and I think you need to make sure that you've got the right information to make the budget or to make the assumptions within the budget. And again, back to having that model that has the flexibility to take those shocks or to take the adjustments that needs to be to continue to let that business head into that goal.
Yeah, you'll often see in the home building space that when a business is really humming and growing and they're looking to scale, you're probably working at 120, 130% in terms of the directors, the GMs, everyone's sort of really just getting the job done. But I think it's crucially important then to just take some time, albeit it might feel like you're not getting the work out and completed, but setting aside some time to budget, to forecast, and really just focus on where you're going to take the business.
Yeah, and I think the point I was going to say around that is you could be growing your top line really well, so you could have these sales coming in, but is it profitable growth? I think that's what we do forget. So it might be that everyone's hands are on deck, everyone's out there working. Directors, as you said, might be out on site getting their hands into it as well, and everyone's working towards this business. But is it just growing the top line, but deterioration of your margins? Or is it growing the top line and profitability is growing as well? Because when you do have people working at those, as your directors might be working extra hours and doing the rest, is their revenue and is their time and their cost actually captured in to the P&L to be a true reflection of what that business is actually doing and generating?
Well, and of course, that's what we're in business to do, isn't it? To make money, to be profitable. So Wayne, thanks so much for your time today. Really appreciate your insights. It's great to see, as you said at the start, having an expert in your field, but understanding home building. And I'm sure our viewers and listeners got a lot out of it.
No problems. Really happy to be here, and thank you for inviting me to be part of this. Appreciate it. Thank you.
And that's it for episode 4 of Tempo Talks. Big thanks to Wayne for the insights on all things accounting and finance. If you got value out of today's chat, hit follow on your podcast app or hit subscribe on YouTube and share it with your network. I'm Jeremy Whiting. We'll catch you on the next episode of Tempo Talks.